Good morning, everyone. Christina Lourenco, the Chief CEO of the Angolan Stock Exchange. I'm not part of the advisory board, just to make it clear. On behalf of the Ministry of Finance, I'll be then presenting the Angolan vision for the economic strategy for the past years and for the years forward. So please bear with me for the next 15 minutes. Angola indeed is one of the most oil-dependent economies in the continent. We are struggling, or I would say our principal struggles would be the infrastructure gap as well as the limited access for foreign direct investors. And to face these challenges, the Angolan government has mainly picked on four key pillars, which are the ones I just have here on my left side. The strong growth underpinned by structural reforms and diversification, the fiscal discipline supporting debt consolidation, a proactive monetary policy, as well as a robust external position supported by energy sector progress. To highlight a few of these reforms, over the past 5 years, and especially after the program we had with the IMF, we put in place mainly these reforms. On the fiscal policy side, the Public Finance Sustainability Law, enacted in 2020, established a new policy framework for our financial sector. There was an introduction as well of the VAT system from 2019, which in 2 years' time led it to be the biggest tax revenue for the government in Angola. There was also, it's also going on a program on subsidies reductions, fuel subsidy reductions, initiated in 2023 and will continue to go forward in 2025. This program has been done in a steady pace, exactly to counteract or not to put more pressure in the inflation. It still accounts for around 16% of our GDP, and certainly it's a pressure on our fiscal deficit. On the monetary policy, I can highlight the modernization of the central bank law. A more centralized central bank has liberated the exchange rate system in the past years, as well as changed some of its governance policies. Regarding the financial sector, the Financial Institutions Law was enacted in 2021, which helped to boost the capacity of the banking system. And at the same time, that the capital adequacy ratios have been bolstered in the past years. When it comes to the private sector growth and diversification, the government has put his efforts in the National Development Program from 2023 to 2027, directed to the diversification of the economy. The key drivers or the key objectives focused on the agriculture sector, focused on the strengthening of our human capital, as well as on food security. Food security and the production of fertilizers and so on and so on. At the same time, and there's no way I can speak of private sector growth and diversification without mentioning the Lobito corridor. One of the main projects the government is pushing is the Lobito corridor, the Namib corridor, as well as a few of energy sector projects, which of course they count on investment from abroad. They count on the private sector investment from foreign investors, the US being one of them, and there's room for more investment, there's room for more foreign direct investment in the corridor to close the entire supply chain. So we'll look for the numbers of how did this reforms, these structural reforms, have impacted in our macroeconomic fundamentals, our monetary policy, our fiscal policy, and our fiscal position. Angola, for the past years, has been focused on the diversification of the economy. The GDP is now, in 2024, accounting for around $80 billion, which previously was more dependent on the oil GDP, but we can see from here that the actual growth rate of the non-oil GDP is growing faster than the oil and gas GDP as a percentage of the GDP. The GDP rates for 2024 was around 3% and is expected to grow in 2025 to 4.14%. The non-oil GDP continuing to grow faster than the oil GDP. This non-oil GDP growth is mainly supported by a strong tertiary sector, mainly a strong tertiary sector as well as agriculture and extractive industries. When it comes to our monetary policy, as I previously mentioned, the central bank, the BNA, has become much more independent than it was before, with a more prudent and proactive monetary policy, which resulted in an increased inflation rate, but contained by a rate policy by the central bank. The rate stated at 27% in 2024, but even so, we believe that the increase in the supply of consumer goods, as well as the proactive monetary policy from the central bank, has been contributing to the slowdown of the pace of the inflation. When it comes to our balance of payments, the current account balance is still positive. It remains positive since 2017, at around 8% in 2024, with gross international reserves remaining strong as well at $15.7 billion, which sums up to around 8 months of our imports, of our needs for imports of goods and services. The Angolan fiscal consolidation efforts have reduced vulnerability to oil prices. We do have a much more diverse revenue base, with revenues on taxes from oil services and taxes from non-oil being the two biggest contributors. The fiscal balance, it's negative, or it's been negative for the past 2 years, but the primary balance is actually growing or continuing to grow steadily on a positive trend, which is mainly thanks to the growth on the revenue from the government. The sustainable debt trajectory. Angola has reached its peak in 2020 with 113%, around 130% of debt to GDP ratio, and brought it down in 2024 to 68, around 68.4%. This is mainly due to a much more proactive implementation of liability management by the Ministry of Finance and the debt prepayments, which were actually supported by a positive trend of the government revenues. From 2025 and beyond, Angola aims to continue to engage with international capital markets. There's plans to actually issue or go to the market to issue a new Eurobond at about $1.5 billion, as well as to capture fundings of about $15 billion on the markets. Our exposure to the debt, to the external debt, is more steady in the last 4 years. Around 47% of our global stock of debt is from foreign investors, both bilateral and multilateral, but the domestic debt is still a significant portion of our debt, which brings us to our domestic capital markets, which around 90% of the total volume traded in our stock market comes from government debt, both on the government bonds market segment as well from our repurchase agreement segments, which was put in place in 2023. And as we can see, it was the main driver of the growth of the trading volume from 2023 up till this date. In 2024, our trading volume accounted for almost 7 billion or around $7 billion. As I stated, mostly driven by the government debt activity that is going on. But we do have other markets, we do have other segments in our markets. In the main market, since 2022, we have 4 companies listed as of now, banks, an insurance company, and as well as BODIVA itself. We have the government bonds segment, the corporate bonds segment, which Sonangol has listed a 75 million corporate bond in 2023, and the ETF segment as well. On the OTC market, we have the repos market, which is mainly used by the banks, the bank institutions, by the government itself through the UGD or the debt management unit, as well as we have a segment for small and medium enterprises. In 2023, there was actually an infrastructural change in our market as well, with the exit of banking institutions from the brokerage activity. Until 2023, the banks were the brokers in the market, and from now on, they only have activities in the structuring of IPOs. They have activities as well supporting the brokers in the liquidity activity. Our focus or our main challenges for the next years, both for BODIVA and the Capital Markets Commission, is to then raise up the share of the equity market progress with new listings, both from the private sector as well from the privatization program, which I'll follow in a few minutes. But specifically to guarantee that the foreign investors have access to our markets. The capital entry and exit has now been liberalized by the central bank. There is only a little exception when it comes to investing in government bonds, which requires a pre-authorization from the central bank. But we are working closely with the authorities to make sure there is a smoother problem and that we can attract more foreign investment. As I said, from 2023, we have listed in our stock exchange 4 companies, 2 banks, 1 insurance company, that amount overall for a market capitalization of about $1.5 billion. Other than the listing requirements for the equity market, we're also working closely with the Ministry of Finance to have actually an ESG framework. The country itself has already implemented this framework, looking forward to issue bonds or a sustainable bond in the international markets, but we're also looking forward to have either through a dual listing or in just a local listing of sustainable bonds as well. Regarding the privatization program, we can state, I only have a minute, I need to be quicker. I can actually state that from 2019 to 2022, the government has received $1 billion in the sales of around 89 assets, and for the years forward, from 2023 to 2026, there's expected to be 74 assets to still be privatized. I call on your attention for the list I have here on my left side, specifically for the BFA, BFA Bank, Unitel, as well as Standard Bank Angola itself, which are due to be privatized through the stock exchange this year. There's an opportunity for investors the banks, as well as the brokers and all the ecosystem from the capital markets are working to ensure that there is an easy way in of capital and also an easy way out of capital. Thank you so much.